G'day guys, how's it going? Just going to be running you through some possible entry strategies using VEMA Trader. So this video will be focusing on support and resistance and how to trade them. You'll be able to apply these lessons to multiple different strategies, but we'll just use support and resistance for these examples. So currently the resistance level that I'd be paying attention to is probably about there. You can see it held as support, held as support, held as resistance. We're getting quite close. You could even call that wick it acting as resistance. So alpha is going to be our resistance level. The support level that I would be watching most closely is probably about there, right? There are other levels you could identify. You could certainly look at that level there, but to me this is sort of the key most significant level, right? That was a big sell-off that held it quite well, acted as resistance through here, support, resistance, and it's the last level of resistance before we broke up. So good chance if we get down there it's going to act as a significant level again. Now there's sort of four possible things that can happen in this range, right? Price can break alpha and keep heading up. It can come to alpha and reject. It can come to Bravo and bounce, and it can break Bravo and keep heading down. The beauty of VEMA Trader is I can put strategies in place to handle all those scenarios. I can put all four strategies in place at once, and then I can walk away and let VEMA take care of it as these things play out. So we're going to start off with price breaks and runs from alpha. So what I want to do is add a setup. I want to come to alpha. I'm going to do live trading for this one because I can. We want alpha, so we select our trigger. The direction is long, and we want a cross strategy. Now, personally, I would want to use the condition operate on candle close. You can see prices wicked through this level before, and so I wouldn't want to just enter as soon as price crosses alpha. I'd want the candle close to really confirm, okay, alpha is starting to break. There's a good chance we're going to run. It's not just a big wick up and then a harsh sell off, and I'm going to get caught out in this trade. So just give me some more confirmation. I'm also going to put on an expiry date because I really only want to be getting into this long if it happens in sort of the next, let's call it a week, sort of 8 days. Because price is quite close to this level, so I sort of want to be in if price breaks it soon. Whereas if we come back down and be doing a heap, in the range, I may not want to be in this trade, and I'd rather come back and reassess in another week and then potentially put another trade on. So I am also going to add an expiry date. Once I get rid of that, we want the expiry date, and let's just go righto. We're the 10th. Let's go to the 13th, and that will do. Beautiful. So now I don't have to worry about price coming back here in 2 years and VEMA possibly entering that trade for me. In terms of risk management, so you guys can feel free to skip this, right? Because you'll have your own way of doing risk management. I'm going to run you through mine. So account risk, I like to always leave that as 1%. Minimum risk to reward 2. Quite happy with that. My stop loss, I'm going to use a fixed percentage stop loss. So when we get the close above, I want my stop to be 3%. That looks like a decent, decent buffer. I'm going to use a 3% stop. So that means that wherever price closes above, so if it's a huge candle, let's say this is my candle, right? VEMA will just measure 3% from that entry and slap my stop loss there. So my stop loss in that case would be about here. I'm quite happy with that. On this cross, I don't really want to use a fixed value because we might put in, more structure up here, and then I'd be happy to use that. But until that's there, there's no way of me knowing what value I want to be using for my stop, so I would rather use the 3%. My take profit, I'm going to target this level. In fact, let's stick to support and resistance. I'm going to target 51552. I'll front run that just slightly, so let's call that 51530. Will do. We might give it a little bit more. 51430. How's that? Yep, perfect. That's front run a little bit. Very nice. So you can see that's quite a nice 4.25 to 1. I'm quite happy with that. Now I won't go in and fill out the journal because I'm going to be showing you guys quite a few strategies that will just add a fair bit of time. So that's all I have to do. So what will happen in that scenario? In fact, I'll bring it back up and I'll run you guys through it. What will happen in that scenario? Then we'll only enter if price crosses alpha, so it gets above this blue line, closes there because we've got operate on candle close ticked, and it has to happen before 13th of the 2nd at 2:02. So about there. It has to happen in that time period, otherwise VEMA will expire this trade. So that is how you set up the cross of alpha, essentially the breakout, right? The breakout of resistance. That is a strategy you'd be looking for there. Anytime you're looking for a breakout, cross is probably what you want, and anytime you're looking for a bounce, bounce is probably what you want. Kind of self-explanatory with bounce. So that's our first setup. Now, the second setup, in fact, I'll do the opposite, the breakthrough Bravo, and keep going, just to sort of show you guys again how to set that up. So this time, really all it changes is I want Bravo. I want Bravo as my trigger because I'm on the other line. I want short because I'm planning on shorting if Bravo breaks. And I want, again, a cross because I want to get in on the cross of Bravo. Again, operate on candle close. This one I won't put an expiry because I'm not as focused on it happening soon. So I'm quite happy to just sort of let that sit and wait. Count risk percent will stay the same. And again, we'll use, we'll use other side of trend line. So in this case, I want to make sure that my stop is above my trend line, because in that one before, if we had, a candle that closed up here, my 3% stop loss could have been placed there, above alpha. In this case, I want to make sure I'm protected by this resistance level. So I'm going to place it, let's call it 2%. I've got a bit more of a buffer because I know that stop loss is in place, that resistance is in place. So, wrong one. Let's go fixed percent, 2%. And for our take profit, we'll use a fixed percent. We'll go with 9. Let's call that. Beautiful. So that is how we create that cross setup. So what that's going to do, as soon as price closes below Bravo, so somewhere in this range, we're going to enter that trade if the risk to reward is still greater than 2. So if price closes just below, somewhere around here, sweet, we'll be in. As soon as the entry would be lower, down here somewhere, we won't be in that trade. Actually, no, we will. We will potentially because of our 9% profit target. It'll depend. That's always going to be 2% above Bravo, so that's always going to be there. Stop loss is always going to be there, yep. But because this will change as well, because this will stay at 9, so it'll be somewhere around here. Yep, somewhere around there. So if price was to close lower than about this level, in fact, let me clean up some of those lines. Price was to close lower than, it's a bit of a fiddly one because entry and take profit affect this one. Somewhere around here. Right, there we go. That's basically bang on. That's a 2-to-1. We're at 8.96, so it'll be a little bit further, so that would be just above 2. So if the candle closes anywhere in this region, then VEMA will enter this position. If it closes here, that'll make our risk to reward not good enough. This would still be 9% because that'll always be 9% from entry because of how I've set that up. But you can see my risk to reward is now 1.77. VEMA will not enter that trade. So that is how that setup will act. And that is designed to catch the breakdown of Bravo. So, happy with that. Now, the next possibility is the bounce. Come to alpha and reject. So, I'm going to set up, again, I can just use alpha. I've already got that trigger there. That's showing my resistance level. And I'm going to set this trade up off alpha. I want to go short and I want to go bounce because I'm looking for a bounce. Now, because market structure is quite bullish, right? We had a lower low here, then we got a higher high, higher low, and a higher high. I only want to be taking this short if I can get some confirmation, right? I don't just want to be blindly shorting this level because, there's a good chance it's going to break. Market structure is looking a bit bullish. So I'm going to use distance to confirm. I'm going to use operate on candle close. And again, I'm going to add an expiry date. I'll use the same one just for simplicity. So we'll go with the 13th about the same time. Cool, that's done. So I'm going to give this a distance to activate just to avoid getting front run. So we'll go with, we wicked up, what's that, to about 0.5. We'll go with 1% now. So distance to activate, 1%. What that will do is as soon as price gets within 1% of alpha, so let's call this our distance to activate. And I'll make that a bit bigger so you can actually see it. It's over on the right hand side, so it's kind of hard to see. That is our distance to activate. We'll put that on the top. because we're going to have a distance to execute in a sec, and we will hide this to clean things up a bit. Cool, so that should be 1% from alpha. Near enough, beautiful. So what that means is this trade will be activated when price crosses that line, when price moves to within 1% of alpha. Because we have our distance to confirm, it won't enter. It would currently because that's 0, but we're about to put a distance to confirm on. So I use distance to confirm when I want to see a rejection, when I really want to see, you know, price push away from my line. So I'm going to go with a 2.5. I feel like that's a good amount. 2.5% distance to confirm. We'll hide this one again. So you can see this. See how the indicative entry just moved down? That's because now the highest possible price that VEMA would enter that is at this 2.5% below alpha. Because if price is up here, you know, say price is around the distance to activate line, well, it still has to reject the 2.5%. It's VEMA's entry conditions are never met until price crosses below this distance to execute line. And so that's why the indicative entries move down, because that is the highest possible entry this could currently take. This is now distance to confirm. Sorry, I'm used to distance to execute, and we'll put that on the bottom, just so that's spread out a bit. And we will change the color. We will make that one green, because that has to be met before we can enter. All conditions do, but we'll go with green for that one. So what that trade currently has to do is it would have to move up to within 1%, tick the distance to activate, so we'll give that a tick. Then it has to reject 2.5% from Bravo, which is where our DTC line is, and then that would tick the distance to confirm. I like to use the candle close feature to make sure it has to close below this level. So it stops price from just coming up, wicking down, closing as a big bull hammer, and then continuing to head up. By using the distance to confirm, price has to close down here, which means, right, if we think about this, price has to have touched the distance to activate, so price has to have been here at some point, then it has to close down here. So there's a few ways that can happen. If it happens in a single candle, that's going to look like a big bear hammer, right? Price has to wick up to DTA, has to close back down here somewhere. If it happens over a couple of candles, this was a question I got yesterday, if it happens over a couple of candles, it might look like an evening star, right? Price, in fact, I can just control Z these. It'll be, oh no, I brought them all back. There we go. If it happens over a couple of candles, right, imagine we get a big bullish engulfing into our distance to activate. Then we have a doji, bit of indecision, and then we have a big bearish engulfing. So we're going to get like a morning star. It could happen in two, right? Price could just come straight up, come straight back down. But the fact of the matter is, price has to close below this distance to confirm after coming up to hit this distance to activate. So it's really confirming price came up, rejected, closed down here, right? That is what has to happen on this trade, and we'd also have CC below the distance to confirm. That's what has to happen for this trade to enter in its current state. So that is a setup I quite like. Then we would get into risk management. So we got VEMA demos, sticking with 1%, always minimum risk to reward. When I get confirmation like this, so when I do have a setup with a confirmation setup, I'm happy to drop my minimum risk to reward a little bit, because you have some confirmation that trade is already going in the direction you want. And so you kind of lose some of your risk to reward. You know, I'll show you on the next one where I sort of just am having to buy. And I'll get a much better risk to reward than potentially on this trade. When you have that confirmation, it sort of eats into your risk to reward a little bit, which is fine, because it usually will increase your win rate if you're doing things, you know, sort of the right way. Because you've got more confirmation, it's probably more likely to play out than sort of a blind trade that, you know, I typically like to enter. So you just sort of got to balance your risk to reward to your win rate, and the confirmation should help your win rate somewhat. I'm going to use a fixed stop loss. I'm going to use a fixed value here, okay? I'm going to put this just above this wick. I want to make sure, regardless of where this enters, my stop is above that wick. So we're going with 46114. 46114. And for my take profit, I'm going to target Bravo, right? Because that's the next support level that I'm sort of paying attention to. So 39945. 39945. Now, I'll use this to show the minimum risk to reward, because it's a little bit easier than the last one, because the take profit doesn't move in this scenario. It's always going to be at that value. So with the 1.5 minimum risk to reward, what that means is VEMA will only enter if price closes. Will that not? No, it's not going to let me. Oh, because I'm on the tool. Hang on. There we go. Beautiful. So price has to close we will call this red, because if we'll call it red, we'll make this one red, and we'll call that price must close above. Because if price closes anywhere lower than this, our risk reward will be less than 1.5 to 1, and so VEMA won't take that trade because our minimum risk reward is set at 1.5 to 1. So price has to close between this red line and the green line. If it doesn't close below the green line, then our distance to confirm is not satisfied at the candle close, which is important. We've ticked that. If it closes in that range, then our distance to confirm has been met. Price has rejected more than 2.5% from alpha. Our candle close is met. Price has closed more than 2.5% from alpha. And our risk to reward is still above our minimum risk to reward, right? It's still about a 2 to 1. Only at that red line where we get to a 1.5 does it go below the 1.5 to 1 minimum risk reward, and then VEMA will not take that trade. So hopefully that is a really good explanation of a few different entry conditions. And our final setup, so let's get rid of these just to sort of clean the chart up a little bit. Our final setup was the long from Bravo, the bounce. So for that, we want to add a trade. We can again use the Bravo trigger, which is nice and handy. We can go for a long and we want a bounce. We're thinking price will bounce from there. Now, in this scenario, that's been a pretty significant level before, right? And because the market has turned bullish, we got our higher high, I'm quite happy to take this with less confirmation because I'm trading with the trend. The last one was a little bit counter trend. This one's going with the trend, so what I'm going to do here is not have a distance to execute. I'll have a distance to activate just to help me avoid being front run. So let's go with, let's say 0.5%, right? That looks pretty good. There's been a fair few wicks into that area. Let's call it 0.6. Give yourself a little bit more of a buffer. So you can see that what that's done is move the indicative entry up. That's because I have no other conditions set. As soon as price crosses that 0.6 threshold, all of my conditions are met, right? Essentially all that has to happen here, if that was 0, all that has to happen is price crosses Bravo and VEMA would enter me into this position. By giving myself the 0.6% distance to activate, it essentially just moves Bravo up 0.6%. With risk management, in this scenario, I'm happy to use my 2 to 1 minimum risk to reward now because I don't have that confirmation, so I should have a really good risk to reward on this. I'm going to use a fixed value again. I'm going to use this level, so 36810. 6810. And I'm going to target back up here, so 45398. Ah, 3545. There we go. Much better. So you can see if you look at the estimates, right? My estimated risk to reward is 1.75 to 1. That basically means that I can't take this trade, right? If my minimum risk to reward for non-confirmation trades like this is 2 to 1, then according to my trade plan, I can't take this trade. The beauty of this is I can set this trade up anyway. VEMA won't take it. VEMA will enforce my psychology and my rules for me. As long as I don't touch this, right? And you shouldn't, if you know, for a certain strategy, that's your minimum risk reward, don't be touching that just to make it fit. I'm not going to look at that and go, oh, well, I'll just make that 1.5, that way it can enter. No, the rules are, well, not 23. That'll be a bit tough to get into. The rules are 2 to 1, okay? So that's come out as a 1.75 to 1. I could move my stop loss, I could muck around with things, but I don't. I stick to my rules, and VEMA here will help me stick to my rules. I'm going to create that anyway. There's no chance of it ever entering, but it just allows me to sort of see what happened on that setup. And so there you go, right? So those are 4 different ways that you can set up trades if price is in a range. Now you can essentially use these 4 different setups for all sorts of things, right? Ascending triangles, descending triangles, trend lines on a slant, right? I'll cover some of those in other videos, but it's essentially just the same 4 basic strategies used over and over again with slight tweaks. So hopefully that helps you guys see how to set up some trades, how to trade ranges with VEMA potentially, and yeah, let me know what you think. Let me know if you have any questions, any feedback on the video, and I will see you guys very soon.